Hello all, Tony here. Well, fresh record highs for US equity markets on Friday night, supported by the Fed's rate cut, expectations of further cuts, and signs of progress in US-China relations as President Trump announced he will meet with Chinese President Xi at the APEC summit in South Korea next month ahead of the new November 10 deadline for tariffs. Looking ahead, the key event on this week's economic calendar is the Fed's preferred measure of inflation, the core PCE price index for August. However, that has paled somewhat in significance, given we know the Fed is now prioritizing downside risks to the US economy from a rapidly cooling labor market. Let's take a look at the charts of the Nasdaq and the S&P 500 to see where they are as we start the new week. All right, the first chart we need to start with is this NASDAQ chart on the weekly chart. We've been monitoring it for quite a while, and what you can see is that we now have a confirmed break and close above this trend channel resistance, which dates all the way back to October 2022. Now, on the daily chart, we can zoom in and have a look at the Elliott wave count we've been following, and you can see here that in terms of an Elliott wave advance, which should typically take place in 5 waves, there is now a 5-wave advance in place. Here is your wave 1, your wave 2. Then over here in August, we have the wave 3 high, followed by a wave 4 correction, and now we're in wave 5. Now, how far can a wave 5 go is the question. The minimum requirement is in, but if we zoom back out and have a look at that weekly chart, you can see that there is now a pretty clean break higher. And what that suggests to me is if we do start to see some FOMO really creeping into these markets in the next few weeks, there's no reason why we can't push up towards this 26,000 area. But as I said, we are looking at a wave 5. Now, what would be the initial indication that a wave 5 high is in place? Well, initially a breakdown below this support area here, coming in around 24,000 to 23,900 would be an initial indication that we have seen a wave 5 high struck and that we're looking at a corrective pullback somewhere into this area here, possibly as far as this area. Now, for the S&P 500, again, starting with the weekly chart, you can see that the break the previous week has been confirmed. And in terms of where it can go, well, look, at this point of time, there's no reason why we can't push up towards 6,800, particularly if we start to see some FOMO creeping into these markets. In terms of where we can get to on the daily chart, you can see here, this is where the wave 5 I've placed up around 6,800. That is just a projection. It doesn't mean it's going to get there. But at this point of time, this trend has been strong and it could easily get up to this area. Now, where would be the initial indication that a wave 5 high has been struck? Because that's really what we need to keep in mind now. It would be, for me, an initial break below this Wednesday low last week, coming in around 65.51. And then you have a decent layer of support coming in around 6,500 to 6,480. If those two support levels were to break, then I think you're probably looking for a pullback at least towards 6,350, possibly into this 6,200 area. And then you're probably looking for a setup to be a buyer leaning against this 200-day moving average. That's all for me this week. Thank you for listening.